afternoon, everybody. It's Friday. We're back again. It's me, Chris Pollock.
And me, Z.
Welcome to the Educate2trade podcast. What a week, Z. Shall I leave you the floor?
Yeah, of course. So when we left on Friday, if we look at the chart here, we were planning for Liberation Day. So when Liberation Day was coming arising for that Wednesday, I made sure that I had the weekend off. And I made sure the first 2 days, so Monday and Tuesday.
Wait. Long-term listeners will think, hang on a minute, Z took a weekend off trading crypto?
Absolutely.
No way. I don't believe you.
I don't believe myself either, but I did. I did not trade Solana, and I took the weekend off. I played some golf with my father. I was able to now just really concentrate and just wait for this Wednesday move, because I knew a Wednesday move would make me a bunch of money. And I want to show it on the charts with you. So this was about 9 p.m. on a Wednesday, and what we saw was Trump sort of introduce his new tariffs. So if we go into the browser here, we could kind of see the tariffs that he sort of set out. So he put a tariff of 34% on China, 20% on the Europeans, and the UK also got tariffed.
Hardly,
but it did get tariffs. What that did for me was, Chris, normally I told traders to stick by the rule. But it's one of those sort of weeks where you're sort of anticipating a big move. Mm-hmm. And I had my sort of area here at 578, or let's say 5680 as the region to take the short. And what did I do? I had a pending order here for sell, and I was able to catch a bunch of this move here.
Well done.
So that was the move. So if I put the ruler here and we go from 5680 and take this down here, that was my almost 200 point move on S&P.
Wow, something you see on the NASDAQ every day, but not on the S&P. Maybe what, if you're lucky, 5 times a year?
Absolutely. So for a 200 point move to print on S&P was something we were even on the chats. We were sort of speculating with other traders. But for me to catch that, I had to take a deep breath after.
Yeah, you want to get a good night's sleep after something like that, right? It's hard when you kind of running through the night. Like with the Trump election, you kind of need a little bit of time to decompress. But what a move to catch foot there. Well done.
Absolutely. So that was my trade here. And I also had gold in line as well, because gold was, remember last week we were talking about this, gold was making all-time highs. When we have no confidence in the US assets, when we have no confidence in the futures, we look for safe havens, right?
Right.
And what did gold do that same time, Chris?
Well, let's have a look at a daily chart here, because we've seen some interesting moves afterwards that I hope I warned you about last week. When it comes to a crescendo, holy shit, it likes to do it, doesn't it? Mm-hmm. But yeah, we posted all-time highs. Literally, it was a wick higher on the immediate aftermath of the announcement from Trump. And then a big unwind yesterday. I mean, it did rally about $80 at one stage yesterday as well, and still posted that red candle. Mm-hmm. And now we're down even more today from the open versus where we are currently, at least compared to yesterday. So as I mentioned, when it's over, it will tell you, and it is screaming it is over, at least for now. Let's see how this all unwinds from here. But what a move in gold that is.
Absolutely. So when you make all-time highs, usually people FOMO into longs. So a few traders on the floor today were looking to put long orders, and I had to warn them and say, I think you got to double think the situation here. Whenever things make higher highs, when especially in an all-time high, we have to really measure why we're taking a high from here, because usually we see sell-offs.
Yeah.
And currently, if you look at gold here, we sold off from the 32,000, almost 32,000 area.
3,200, let's not get carried away.
3,200, right? Sorry.
It was high, but not that high.
Not that high. So 3,200 was hit, and then we sort of sold off from there. So we're currently at about 3,055.
Yeah.
So that's how my sort of past sort of week has been. That's how I planned it. No sort of events, no dining on a Tuesday with a partner. Just straight technicals and looking for a sell-off. So that was my week. How would you sort of classify your week, sir?
Well, yeah, similar in many ways. I wasn't there through the night like you were, but you did very, very well yesterday. Even better today, actually, in the post events. We kind of mentioned last week on the podcast that you probably want to skew your week to the second half of the week. We knew Liberation Day was coming. We didn't quite know how bad it would be, and a lot of people are saying this is worse than the worst case scenario. And then we had non-farm payrolls today, but I mean, no one paid attention hardly. This for a few reasons. Firstly, we're getting this new regime has started. So the jobs that were created last month, hey, there's going to be a whole new plan next month. So it doesn't really tell us anything going forwards. And let's be frank. I think the ones over the next 2, 3, 4 months will be very interesting. But with all the news we had on Wednesday, these moves are all about Wednesday still. So yeah, even non-farm payrolls has been gobbled up in all this and almost ignored to a way that I almost can't remember the non-farm payrolls being looked at with such little interest. So yeah, the plan for the week was chill early on in the week. Try and get yourself ready. Have the weekend off every weekend. Is it? No. So I'm always ready for the week. But yeah, very much kind of keeping it easy, especially through Wednesday when we were anticipating that late night comment. But yeah, it's been all hands to the pump. Strap yourself to the desk time. And I'm done for the day now, having said that, even though we have Powell, which we'll probably come to in a moment. Kicking off in a little over 10 minutes, which we might get back and listen to a little bit of.
So that's the sort of thing I want to go into now. So now we have Powell speaking in 15 minutes from now.
Yeah.
In 15 minutes now, Powell usually, works around his comments, but today he will have to comment on the tariffs.
He will. These press conferences from the FOMC, and whenever you hear him speak, he never talks about tariffs. Well, he talks about the concept of them, but he's like, look, we don't know what they are. We'll deal with it when they come. Well, they're here.
They're here.
He knows, and now he needs to talk about what that implication is, or how he sees the implication of the market. So yeah, I think this could be a really interesting afternoon. I mean, stocks have been absolutely obliterated, but we'll show you, in a moment why these things turned around. But if we just look back to the stock market quickly and take a look, maybe even just on like a 1 hour chart since those highs were posted on Wednesday night. That every single rally seems to be being sold into. There's not too much life in this market. Any opportunity where you see any green or any tails, it's a sell, right? Until we've had a little bit of a change of sentiment, which we'll get onto in a moment. But this is huge, right? They're talking about the tariffs being something that we haven't seen since 1909. Tariffs from the US this high. The last time they did a big tariff push, or one of the last times, was in the 1930s. Yeah. Famously not a great time for the stock market or for working people, right? And this is the kind of people he's trying to save, right? And bring things back for. So, it looks like being a tough one for the US. I'm interested in talking about what's going on in the UK a little bit. We only have tariffs at, a 10% rate. Where's your little thing here? Here we go. So yeah, we're one of the lucky ones. We got a 10% tariff rate. Okay. Well, it probably helps a little bit that we don't make anything. So our exports to the US aren't significantly high anyway. So one of the reasons, if you do want to get long stocks, maybe the FTSE might not be the worst place to buy stocks if you absolutely have to today. But maybe you want to wait a moment. This is very different to our close neighbours in the European Union. This makes Northern Ireland really interesting, actually, because it kind of like straddles both sides of the European Union and the UK. Obviously, it's in the UK, but the Windsor Agreement makes puts it in a slightly different place, and maybe a difficult place if Ireland is being taxed on imports at 20%, and they can just drive over the border and send it from Northern Ireland for 10% import duties. Hey, maybe there's some business to be done there if you're listening from Northern Ireland. But I think even the similar sort of things can be said in the UK, right? We can, if you look at the tariffs that are coming in from the likes of China, huge industrial producer. Back when Trump was last here, he put tariffs on China, so loads of manufacturing moved to Vietnam. Well, he's hit them pretty hard too, because now he's penalising people for producing the products that Americans buy. Yeah. So maybe now someone else will pop up who's on low tariffs, create the infrastructure and factories, make this stuff, and then he'll just whack them with a tariff anyway. Mm-hmm. So it puts them in a really, really weird place. But perhaps for us in the UK, again, if you work in import-exports or you want to have one of these sort of businesses, just think about, can you buy products from overseas somewhere, I don't know, China, and then sell them to the US at a much discounted rate than the likes of China can do. I'm sure a lot of people are looking at ways to kind of play this system a little bit. But there's definitely, for those of you who can move quickly on these things, doesn't take long to set up businesses and websites these days. Maybe there's some money to be made there. It seems like a pretty clear arbitrage opportunity to me.
One thing I want to focus on, so if you look at China's sort of tariff, 34%, right? So he's already put a 20% sort of tariff on them, I think last week or the week before. So this goes up to 54% on China.
Yeah.
What would that mean for Europe, for example? Does it leave Europe open for opportunities?
Well, Europe, yeah. I mean, there's certainly fewer tariffs that have been applied to Europe. But what you would say is, I don't think this is done, right? And already there's noises coming out of Germany and France that they're going to push back. In fact, we heard that the big move that happened this morning was when China said that they're also putting tariffs back on the US. So this trade war has only just begun. So if the European Union want to flex, and it's a big market, right? It used to be bigger than the US in terms of GDP, but less so now. It's still a hell of a puncher. So maybe they can, really dig in here and try and fight it. But I feel like these tariffs could go up for one or two of these countries if they do push back. Again, that might really open the door for us. I'm more optimistic about the UK here than I am Europe from that perspective, but I still think Europe could do okay.
So I had an opinion on two things, right? Blockchain, as you know, I trade crypto, and I also have an opinion on AI. And when we look into AI or blockchain, we look into semiconductors. And when we look into semiconductors, we look at Taiwan. So when this tariffs was sort of being announced, I was looking at Taiwan getting a favorable tariff. But that didn't happen, Chris. Taiwan was also thrown a 32% tariff.
Yeah. Taiwan Semiconductor Company is one of the real interesting businesses of the world, right? It's in Taiwan, which sees itself as independent to China. China doesn't agree. And they have very close contact with the US because of all the tech that's done on the West Coast. So Nancy Pelosi's flown over there kind of controversially to kind of woo I can't remember the guy's name who runs that business now. But yeah, this is going to be a really interesting place to think about. There's always been talk about the potential for China to kind of swoop in and claim Taiwan back for sure. But yeah, I think this Taiwan situation will be one with the semiconductors. The announcement today from China is that they're going to start banning a lot of these rare earth elements. If you haven't heard of these things, like REEs, I nearly set up a company trading these things many, many moons ago. You can't pronounce most of them, which is probably the reason I didn't. But if you have a look at this, China have basically said they're not going to sell this stuff to the US anymore as a countermeasure, and the US needs this. Taiwan need this. So maybe Taiwan will have a trouble getting this, knowing full well that these semiconductors get moved on. So I think there's a lot of interesting moves happening already, and we're only 2 days, not even 48 hours into this.
It's a lot to take in. Like as you said, like other news is coming up, right? If we look into Forex Factor, we can see other news coming in. We had non-farm employment change. We had unemployment rates. We had a bunch of news that came in, but the sort of, I'd say the ether is towards tariffs.
100%.
Right? We aren't looking at these numbers. We're not looking at 32,000 sort of employment change. We're not looking at 6.7% in Canada. We're not looking at 0.3%. We're not looking at 228,000 employment change. We're not looking at these numbers, huh, Chris?
Well, you could look at them as an opportunity if they're good and send markets higher to just get short again. Right, it's just a case of I can sell this higher. That seems to be the state of play at the moment. I mean, this will fizzle out at some point, but we are not in fizzling stage. We are in absolute, we are flying by the seat of our pants down a hill on fire at the moment, right? It is absolutely cratering the financial markets. And just to put a figure on it, we've been down 5% on the Nasdaq yesterday. We were down over 5% again today. Haven't seen these sort of moves since COVID. So to put it in some perspective, we had a bad year in 2022 and it did nothing like this.
No.
So yeah, I think we're, if anything around the news, and we'll maybe have a look at the calendar. I haven't even looked at it for next week, to be honest. It's not normally the biggest week. We've got juice CPIs maybe, might be a bit early. I think there's very little to care about on the calendar at the moment. It's all about news flow. And you need to either have a squawk. If you want to follow my Twitter account, you can kind of search my list. There's a squawk list on there, which will get you live news very quickly. You need to be aware of what these guys are saying. Maybe you can watch, CNBC or Bloomberg as you're trading, satellite it in, not on a stream, because they're about a minute slower. And yeah, that leads me nicely on. This is from my sport list, just following some of the financial businesses that send out live news to traders. They do this through audio squawks that we have in our office, but they also put the news on to Twitter, albeit a minute or two later. But a minute or two is not that long in the market at the moment. It creates big moves. So the low that we had, big capitulation. If we look at the time print on this, 3:55 p.m. today. I've heard from Wall Street sources close to the White House that Bessent, he's the Treasury Secretary, is trying to moderate, albeit quietly, Trump's hardline stance on trade. If he ramps it up, it would be the first significant in-house battle in the new administration, pitting Bessent against Lutnick and Navarro, was a Fox reporter on X. And that's from Fox, right? They're pretty pro-Trump, so they know something that's going on here. And if we want to look at the implications this has on markets, let's take a look. What was that time? 3:55? Should I do this on a 1 minute chart? This might be even better to see, because that was probably a little bit late. So yeah, if you're already getting that news a little late, we got it live. Literally at this point we were getting this news, and managed to get myself in some nice long positions on the back of it, because we'd had a huge capitulation, and it was never going to take much to lift it back a little bit, as we saw yesterday in price action. We had a big sell-off. But again, there was a time there yesterday when the markets did fight back, right? If we look through to yesterday, here we go. So we had this open where it ramped up. We had the big flush and had a huge range back here. We're at 55s all the way up to 25s almost. Yeah, so we're looking at 70 plus point rallies as like counter trend rallies in this. So you can make money on the way down. I find that easier. You can try and snare things on the way up. But I mean, don't be trading every single moment of the day. You probably want to pick your moments fairly well. But given the news that came out from Bessent today, I mean, that has just turned everything around. And in terms of the lows on the S&P, 51s around the 50s again. We got up, 130 points up. Is that right?
Yeah, wow. 50 points. That's a huge pullback.
News moves markets. So do not ignore news when you're trading at the moment. If you're a purely technical trader, good luck. It will, sometimes the news will help you, sometimes it won't, and if you're happy with that, that's fine. But if you want to take yourself to the next level, have a look at the news.
So traders that I've been in since Monday, they've been all sort of technically telling me about levels. What I've been doing for them in the past sort of 3-4 days leading into Liberation Day is showing them all the dates of, you can say, the Trump tariffs, all the dates into non-farm employment change. I've been showing them all the fundamental sides to put into their candles. So whilst we sort of look for vertical charts, I was sort of, in horizontal charts, we were setting up vertical highlights in that sort of segment.
Sure.
And that's really made a big difference to traders, because now what they've done is they've sort of engaged with both the fundamentals and the technical sides, especially in volatile times like this, Chris. Like, you have to make sure that you are engaged in both sides of the tail, not have bots try to trade there, because you would be taken out.
My bots, if I had bots, they would be off.
They would be off.
The human, unless you can do some news algo bots, but I know some people that do those. But yeah, I would stay away from bot trading and technical trading at this particular moment. Things will settle down, and I'm not saying it's not worth doing. You can still make money and trade through here and probably make money, but I'm pretty sure you'll make more money if you're following the news flow at the moment. But levels are important. Like, I'm not a chart trader. I use levels from order flow, from the option data, talking about that 5,500 on the SPX. I mean, we talked about this at the end of last week, that 5,500 would be a big potential rally point, and if it did break, the 5,500 would be the retest, right? So where were we? We kind of rallied off this level. 5,500 would be like a 100 odd point rally, and when it broke, where did we retest? You got it. We went back into that 5,500 level before we then rolled over. So like, levels are important, and levels keep you patient. But if you can get the story and the levels to match up together, and then all the flow as well, just to confirm that what you're seeing other traders are doing too, I think that's the way. That's the way. It really is. You have to engage with both sides and find your setups then. You shouldn't just be based on technicals. So when the traders were sort of lining up their horizontal levels, I was setting up their vertical lines. and I'll continue to do that going into the next week or so, because there's going to be a bunch of pullbacks. There's going to be a bunch coming up next week, because we are going to react from this at some point. So that's my sort of view for the week.
It's been a long week. I've had to give away my sort of setups on a Wednesday and not play technicals and just go on the cuff. Like some in a boxing ring, you go through, you know, on the 7th, 8th round, you go off the cuff.
Yeah.
And that was my Wednesday. And since Wednesday, I've been sort of, you know, getting my sleep, getting my recovery. And I might have to not trade this weekend either.
I think that's smart. There's going to be plenty of fun through the week next week as well. Yeah, we're talking about rules before we came on, like, you know, basically tearing them up at times like this. They say, I think it was Educate2trade who said that good traders have rules and they stick to their rules, but more importantly, they know when to break them. And this is one of those times. That's not his quote, but it's more or less there. This is one of those times when you want to kind of, well, you could write this in later for when these volatility events happen, but you've got to try and trade things very, very differently when the market's moving like this. So just be mindful of that. And if you're new to this sort of thing and maybe you've had your ass kicked, learn from this. You know, it's hard trading in volatile markets. It might look easy after the event, but the moves are so big, the ranges are so wide. You've just got to really be trying to trade at extremes if you can, or try and catch momentum. That it's easier said than done. But yeah, a really good learning time for many, many traders, I'm sure, who haven't been around and maybe didn't trade through COVID. Yeah, this is kind of the next biggest sell-off we've had since.
Yeah, so it takes experience to see wicks. And when news is coming in, we see a bunch of wicks on both sides. So when a new trader's trying to trade a short, for example, like we did on Wednesday, I had to make sure that I wasn't going to be wicked out. And that's a really tough thing to do for new traders. So I tell people, especially when they're starting out, to maybe avoid these events and just observe. And Wednesday was the day of observation. The next 2-3 days are days of observations until those consolidations swing into the next sort of level. So I would say keep a balance between the two, especially if you're a new trader.
Love that. Yeah, maybe even if you've got like your own money, if you're trading with your own capital, big or small, or you've got funded programs, just maybe trade demo for a few days, right? You'll learn a lot from this stuff without the stress of it being real money if you've never traded in this environment. And then you can kind of, you know, journal this stuff down, and whenever this stuff picks up again, you can open that book and remember this time and see what you learned on those days and see if you can apply it again. Absolutely no harm in doing that. Some of the best traders in the world move back to demo at certain points. So yeah, don't be thinking, oh, I'm a live trader now, I don't need to trade demo. You're not here to trade, you're here to make money. And one of the ways you make money is not losing money foolishly. So yeah, just a word to the wise for those new guys out there who need a little bit of guidance.
So, I mean, let's conclude it for today. So we've had an eventful week, and even us being sitting here and not be taking trades is a big thing, because, you know, it's been since Wednesday we've had so many setups for the experienced trader that the new trader's looking at these things and he's like, I missed out. Mm-hmm. FOMO, fear of missing out.
The worst.
The worst thing that you can have. So I would say, no, there's a lot more opportunities coming up to wait for your setup and not to rush things. And a bunch of traders this week, on especially Wednesday, the amount of text messages I got at 9 p.m. at the dinner table made me laugh, because I've been there and done that, and I'm sure you've been there more than me.
Yeah.
So we learn from our sort of setups. We learn from our experiences, and we take that into the week ahead.
Every day is a school day.
Mm-hmm. Every day we learn. I mean, even like 15, 20 years on, people are still learning about environments.
It's me. I know I look good for it, but I'm 20 years in nearly.
Yeah. So I think that concludes it for this week.
Should we even bother with the calendar? I mean, I'm having a look here. I can't see anything jumping out at me. I mean, don't forget we have PAL kicking off if you're on live with us in like 4 minutes, so it's a good time for us to jump off. Anyway, so maybe PAL's comments will lead on. I mean, UADA's going to have a chat. There's nothing early on in the week of note. Rate decisions in Australia. We got minutes out of the Fed. Again, these will be fairly meaningless compared to normal, because now we're in a new regime. The CPIs are out. They're out a little early. Fine. This one could be interesting if it's high, but the last print was low. This could maybe be the one if you wanted to look at one piece of data this week. And then PPI is out on Friday. So okay. It's not a bank holiday in the US, is it? Next week? No. Okay. Unusual to see PPIs on a Friday, and then these consumer sentiment numbers have been pretty interesting as well. So bits and bobs, but let's be honest, no one cares. It's all about tariffs.
It's the tariff. It's the time of the tariffs.
Tariff times.
Right? There's a funny meme that I saw on the internet where Trump is sort of looking below to penguins, and he's telling them pay your tariffs, and the penguins are like, we're gonna look elsewhere. So it's something to play off the cuff, and I want to see how this sort of develops going into the weeks ahead. I want to see sort of what the Europeans have to say about it. I mean, China's speaking out now, and soon we'll hear from Canada and Mexico as well, because they've
yeah, then I don't see them sucking it up. So he's kind of played his hand, and no one's going to roll over and get their belly tickled by the looks of it. I mean, maybe the UK will because we got away with it a little bit. Maybe we'll just try and keep our mouths shut. But if they push back, then he's already said he's going to go again, and I believe him. One of his Truth Social posts today was that, like, I will never change my policies. Wow, we're 2 months into 4 years of this. Wow. If he's never going to change his policies, we might have seen the highs in stocks for a whole generation. We'll see.
Awesome. I think that closes it for today, Chris. What's your final words?
Yeah, just be smart. Sometimes in these high volatile environments, maybe wider stops, bigger targets, or if you just use the same stops, just be aware you might get wicked out more often, but probably still use those bigger targets. So when you do get paid, you get paid very, very well for getting it right. But yeah, just learn from this stuff. It's a fascinating time to be in the markets. And I think next week will be another good one, even as we ease into Easter. 2 weeks from Easter now? I'm not back next week. You're going to miss me.
I will. We will all miss you for that week. Huh?
But I think Jonathan's coming in, our resident economist. He's probably a really good guy to hear from in the face of all these tariffs. I'm sure he'll have one or two interesting things to say.
Yeah, for people who come in for next week, do stream in. We're going to have Jonathan here, and he's going to give us the fundamental side of things. I think that's really important for the technical traders.
That's it. All right, well, signing out. I've been Chris Pollock.
Me, Z.
Have a good weekend.
Take care.